strong June job growth could delay Fed's interest rate cut. Here's what you need to know. The latest employment data for June has come as a pleasant surprise, revealing that the U.S. job market continues to thrive, potentially putting the brakes on expectations for an imminent interest rate cut by the Federal Reserve. According to the Department of Labor's report, the U.S. economy added 147,000 new jobs in June, far exceeding the Wall Street Journal's predictions of a 110,000 increase. The unemployment rate also saw a modest decline, dropping to 4.1% from 4.2% in May. But here's where it gets controversial. Healthcare remained a pivotal driver of job creation, maintaining its track record of stability across various economic cycles. In addition, state and local governments ramped up their hiring efforts, counterbalancing a small decline of 7,000 positions in federal employment. Overall, government jobs increased by 73,000. The June figures weren't the only positive surprise. The revisions made to job data for April and May indicated higher employment growth than initially reported, with a total upward revision of 16,000 jobs. And this is the part most people miss. White House Press Secretary Caroline Leavitt celebrated these figures on social media, highlighting that American-born workers have driven all the job growth since President Trump's administration began, while immigrant employment has notably decreased. This shift marks the substantial reversal from the previous administration's trend of increasing foreign-born employment. Since the start of Trump's second term, employment among native-born Americans grew by 2.1 million, but the number of jobs held by foreign-born workers fell by over 500,000, a drop not seen since the early years of President Obama's tenure. Wall Street took heart from these encouraging employment statistics, resulting in the Dow Jones Industrial Average soaring by 344 points to close at 44,828, just shy of its all-time high. Meanwhile, the S&P 500 and the Nasdaq closed at record levels, reinforcing the message of market optimism. And this point could shake up opinions. The latest job report might influence the Federal Reserve's decision on interest rates. Many economists had anticipated a potential rate cut this July, but the new data may postpone that move. Analyst Chris Saccarelli from Northlight Asset Management pointed out that the favorable employment numbers, combined with existing tax cuts and looming tariff adjustments, make an interest rate cut from the Fed less likely this month. Have your say on this. While some are critical of Fed Chair Jerome Powell for a cautious strategy, visionaries believe the Fed should back the administration's proactive economic policies. Do you agree that the Fed's monetary actions should align with the government's economic strategy? Share your thoughts in the comments below.